So you've invested in, scaled, and started over 60 companies.
Oh, yeah, more than that. Yes.
You've
Yes.
got a motto of doing good and having fun.
Yes.
And because of that, you've wound up in a position to be worth something north of $500 million.
Yes.
There is a lot of things that we could talk about today. We have decided to talk about blockchain, crypto. My listener is busy, right?
Yeah.
They're surgeons, they're CEOs. When they take 40 to 60 minutes out of their day, I want to make sure that it's really impactful for them because I know how much their time is worth. Why should they listen to our next hour-long conversation about crypto?
I think we're in a unique position right now with crypto. Well, and crypto is a big, wide thing. We use a generic term crypto right now, but digital assets or, whatever you want to call it, it's exponentially going to grow. We kind of got by the plateau, the new technology, and now it's become mainstream. When banks have their own blockchains, when governments are using blockchains, it changes the mindset. So now it's mainstream. It's going to be exponential. There's some battles still to fight. But if you're not in that asset class or involved in an asset class right now, you're going to fall behind very quickly. It's always going to be better than the large centralized banks. To get a savings account at a bank is terrible right now. You get virtually no interest. The bank makes a ton of money off you. You can go in the crypto world, make very good yield, be safe. So you have to start thinking that way. You have to start thinking, what are the alternatives to the traditional methods of investing or keeping my money? And crypto is the obvious one that comes up. I've been involved in crypto for a long time, but
How long?
since early days, I'd say probably 14 years. Bitcoin's 16 years old, so probably maybe in 15 years. It's reached the point now where it will disrupt existing markets. It's like we're seeing happen with AI right now. It's disrupting film and TV. It's disrupting software development. It's disrupting everything very, very quickly. And I'm starting to see that with crypto too, and digital assets, where you're starting to see it really start to disrupt stuff. And we had a U.S. government and many governments around the world that are very anti-crypto, anti-blockchain, anything like that. And now that's starting to change a little bit too. So that's where the freedom comes, where you can actually do more stuff. But again, there's still a lot of restrictions on it from the government standpoint, which we can get into whether that's good or bad. But some of the things that's being done right now, is to protect some of the large institutions, things like that, from crypto. But crypto's coming, and it's going to be there whether some of these middlemen like it or not. It's coming for their jobs, just like AI is. You can't stop it. So that's why it's a very important topic. And there's a lot. I'm still amazed that now crypto's been around for, digital assets been around for 15 years. There's so many people that have very little knowledge that don't participate in it, don't do the easy stuff. That I'm like, well, why do you have money sitting in a savings account right now? It's just idiotic. It makes no sense. There's so much better ways or a CD, whatever it is. There's so much better ways in the crypto world to have the same amount of risk, but make a much higher yield. And I want to help people out. I want to help people out. And so I think that's why this conversation is important.
Let's start with terminology. What is blockchain? And please, Peter, you are a brainiac. You are one of the smartest people I know.
Not true, but
you launch rockets in Africa.
True.
You take scorpion venom to cure Parkinson's. Like, seriously, you are one of the most impressive people I've ever met. So please, for my sake, let's explain these like you're explaining it to a fifth grader. I love simple. What is blockchain?
Blockchain is very simply just a log of transactions. It's that simple. It's a ledger of transactions. There's no central authority to it. So it's decentralized. Most are. There's some blockchains that are centralized, but most are decentralized. You can run applications on it. It can be a database. You can tie things to the blockchain. You can do smart contracts, and you can't change it. So you can't go back and falsify stuff, which is another great thing about the whole blockchain world that we don't have in other parts of the financial world.
Is that why it's so necessary, or why is blockchain needed?
The original use case for blockchain is it's decentralized. So you don't need a central authority. The people can control it. So you're taking out middlemen. You take out an authority that can take your money whenever they want. So it gives you freedom. It's the freedom to do what you want with your money, and that's what blockchain does.
So where does it exist?
It exists in a ledger and in a layer one ledger out there.
Like in some data center?
In a block. Well, it's a bunch of data centers, you could argue there, and in people's computers. I don't even know how many miners there are on Bitcoin right now, but it's got to be many, many thousands. That everybody's mining the next block, and that keeps the blockchain going. So not one person has control on it. And then you have to validate blocks between different miners and things like that too. So it's a beautiful system. It's never been hacked. It's been 16 years now, never been hacked. I can't think of another database or another system that's gone 16 years without having some major security event. And that also adds to its value, adds to the trust factor. And I think part of the reason is there's no central authority to control it.
Peter, I
Yeah.
see you sitting here right now, and you are so lit up and so excited about it. Why?
It's changing the world for the better. I have fun and do good for the world. And blockchain, the crypto world, that's exactly what it is. It's doing good for the world. And it's fun. And it's fun. And I for anybody that hasn't done it, when they actually get to move crypto themselves, like move it from one wallet to another or pay a bill or do anything in the crypto world, it's a very good experience. It's not like the banking experience where you got to wire money tomorrow night and it's like you may or may not get there the next day. You're not sure, and everything's done in a second. And it feels good, and you can make money, and it's a great environment.
Hmm.
And you don't have to have special skills. So it's understanding how to send something from one place to another.
It's accessible.
Yeah, it's accessible. Everybody can do it. Nobody can say you can't do it either.
And that's why U.S. governments, for one of the reasons they're probably so scared of it, is because it allows everybody to have access to it. And it takes away
Yeah.
some of their power and control, the banks, the governments.
Yeah. So it is, and that's one big myth about a blockchain in general is very hard to track, or it's a lot of bad money's in there. A lot of bad people do stuff in crypto. And, I would almost argue just the opposite is true. You can, if you do a transaction in the crypto world that was nefarious, it can be tracked down very easily. Much easier than it can with cash, USD. So there are government systems and even private companies are doing very, very well at tracking crypto and who owns what on the blockchain and putting a name to it. It can almost be done all the time right now. So the idea that crypto is used by criminals to hide money, that's just not true. It's almost all money laundering and nefarious activities with money is done in U.S. cash.
Blockchain is a ledger.
Yeah.
And it can never be falsified or changed.
Yes, that is
Correct.
a true statement.
Okay.
Yes.
Crypto. What is crypto?
Yeah, so crypto essentially is the token that runs on that blockchain. There's a lot of tokens out there. I think at last count, I think there's like 1,000 new tokens a day that are released. A lot of them just meme coins. And all the tokens have a smart contract that runs on that blockchain. Right now, there's sites you can go to and you can create a new token or crypto, whatever you call it. Create a new token. You can create a new token in a minute, and release it and put it out there and see what happens. And you can create utility behind it. The smart contracts create utility behind any token. So that is what crypto is. It's the token for payment, for lack of a better term, to do activity on that chain.
You mentioned earlier that having money in a savings account can be a bit wasteful.
Oh, it's idiotic.
So what should I do? I've got money in a savings right now. To be transparent, I'm holding it for my taxes next year.
Yeah.
What should I do with that money?
Oh, yeah. I mean, so right now, I don't know what the Elon savings account, but right now you can go out to Coinbase as a U.S. citizen. You can a one-to-one transaction, a zero-fee transaction. You can convert USD to USDC. You can let it sit on Coinbase and earn 4.2%. And 100% safe. It's backed by treasury bills. It's backed by everything. Nothing's going to happen. Coinbase is a public company. And that is one avenue to do it. But then you can move that USDC somewhere else and make a little bit more. But if you want to get creative, in the crypto world, there's it's called DeFi or decentralized finance. And there's a whole method where you can convert your USD into USDC, another stable coin, BTC, ETH. You can convert it to anything you want.
BTC is Bitcoin, ETH is Ethereum.
Yeah. You can convert it, which takes seconds and almost, usually seconds. And, the fees are incredibly low if you do it the right way. And you can earn a yield off that, and you can become a lender. So if you want, you can say, okay, I got some BTC sitting there. I'm not going to use it for a while. I'm going to lend it out. And you become a lender. And there's decentralized platforms that you become that lender. And now you get a much higher interest rate because people are borrowing it on the other side. It's all decentralized. It's all smart contracts that match all it up. There's no person or no central computer somewhere that's saying, let's match these people up. It's a whole banking system of lending and borrowing that's there. And there's one example in that world that wasn't that long ago. I think it was maybe like 4 months ago, where there was one token paying out 3.5 million% APR because everybody wanted it. Everybody was borrowing it. Everybody needed that token. Everybody's trying to borrow it. So it was just skyrocketed. The yield on it
Why?
skyrocketed. So
Because of hype?
because hyphen, it was deflationary, and there's a lot of other things. But I mean, it wasn't a good token. I'm saying it's not something you want to invest in, but it was deflationary, so that means the price was dropping. But there was some other things we could do with it. So everybody wanted to borrow it, and nobody wanted to hold it a long time. So you think about that. Okay, 3.5 million%. So well, I know it's deflationary. I know it's going to come down. There's not going to be issues, But if you're in and out of a day, you just made what, 80 times your money. So there's opportunities like that out there too if you want to take on more risk. And so it's how much risk you want to take for that yield. And when I say that 4.2%, whatever that USDC is at Coinbase, that's the bare ground. You can't make less than that. It's pretty hard to make less than that. And then it's just adding risk on top of that. And there's ways to hedge against your risk and add complexity on top of that can get you to that 100%, that 200%.
A quick thanks to one of our sponsors, and we will be right back to the show. What separates good businesses from great ones? It's talent. And if you're looking to make one key strategic hire, like a CFO, or a batch of people, like a batch of electricians to scale your business, Elite Executive Partners will help you do that. They will find good people, which, let's face it, it's very hard to do, and they will do it quickly. If you're looking for help scaling your business, reach out to them at elitestaffco.com. That's ELITESTAFFCO.com. Let's get back to the show.
So what has happened is there's a banking system in the crypto world right now, in the digital asset world, and it exists. That's why the banks are scared. The big institutional banks, they saw that coming. And the smart money was already in that world. The dumb money was in the banks still.
So do you think Jamie Dimon, famously CEO of JP Morgan,
Yeah.
he's sitting there saying, no Bitcoin, bad.
Yeah.
Is he sitting there buying a bunch of it behind the scenes?
So ironically, when he was saying that, I knew people that were working for him that were working on Bitcoin. So it was a delay.
The rich
tactic.
want to keep the rich and the poor poor.
Yeah. The established, we'll call it the banking system, wanted to slow down the innovations of crypto so they could catch up and they could have solutions. And they were successful in doing that. So it really got delayed in the US. They're finally now, I think even Jamie Dimon came out and said now I like stablecoins. I like all this stuff, because he realizes that he has to use that. JP Morgan, they already have the JPM coin. So certain transactions within JP Morgan or between countries they've been settled with crypto for a couple of years now. So I was already going on internally in JP Morgan. It's idiotic that whole concept of doing a wire transfer just seems so idiotic to me, but you still have to do it. And it's another thing that is just going by the wayside. We're not going to be doing 3-day ACHs, these wire transfers. Those days are over. Are you still clearing through the Fed? Are you still doing that? Those are questions that kind of have to be answered. If you're doing stablecoin to stablecoin transactions, you don't have to clear through the Fed anymore.
What's a stablecoin?
So a stablecoin, stablecoin, it runs on a blockchain, but it's tied to an underlying asset. So the most common stablecoins are tied to the US dollar. So they have a one-to-one relationship. So the stablecoins are issued when it needs to be at par to keep par with the value, or they're taken off the market to keep par with the underlying asset. Most common ones out there are USDC, which Circle Financial runs. USDT, Tether, is the other one that is more used internationally. A couple hundred that are in use today, and some are very novel approaches. But for example, we settle in stablecoins. We don't settle in USD anymore. We settle in stablecoins. So if we're clearing out of a transaction at the end of the week on a Friday, if we're getting out of if we're getting out of a trade on the U.S. exchange, stock market, we're selling in stablecoin. We're not selling USD anymore, because we don't want USD. There's actually, it's harder to move. It's going to be sitting in a bank somewhere. I'm selling in stablecoin. I can move it anywhere I want in a second. I don't have to worry about something happening, Silicon Valley Bank issue happening again. I don't have to worry, because
as a wealthy person, do you worry about where your money is a lot of times?
Yeah, you just have to be diversified. I think that's the key. You don't want all your money in one place, and you don't want it all in one transactional system. And I think there's a lot of money out there that's stuck in the banking system. That's a one transactional system. When Silicon Valley Bank went under, a lot of people don't realize this. There were wires failing. I had wires fail. There were wires failing in the U.S. banking system. The U.S. banking system broke down for an evening, and it could happen in the stablecoin world too. I mean, that could happen, but again, it's going to come up, and it's decentralized. You got less to worry about. So it's a good to have a mix. I would never want all my money in one bank somewhere. You got to be spread out. And I think part of that logic is being spread out and having stable coins directly and owning stable coins directly. There's one USDS, I believe it's called, that is tied to treasury bills. So the value goes up. Treasury bills, I don't know what they're paying, like 4% right now. So the value constantly increases by 4%. So if you buy $1 today, next year it's going to be worth $1.04, and that's where it trades at. It doesn't pay out the yield; it just goes back into the coin. So now, if you want to put $100 in a treasury bill, there's really no easy way to do that. But now with this stable coin, now anybody can do it. They can just buy the stable coin, and then they have access to treasury bills. So it's really it democratizes it. It keeps out that you don't have to be an accredited investor. You don't have to do all this other stuff. You don't have to have special authority at some bank somewhere. You can actually just do it directly yourself in seconds, from anywhere in the world. So I love stable coins. It's great. It's a great innovation. The creativity with stable coins is only going to increase, and the ideas that people have are going to increase in them. I just think the mistake we made in the U.S. is, as far as payment stable coins go, the recent legislation with the Genius Act that was passed. It's a bill for the big banks. I mean, it's a bill for the big banks. It doesn't allow you to pay out yield. So now, if I want to have a bank account that's designated stable coins, you can't pay out a yield, which is terrible. So that takes stable coins out of the savings account system. You have to back it in cash or U.S. Treasury bills, U.S. debt, which is great for the U.S. government and great for our debt, but it's not good for the creative nature of what stablecoin should be. Like, you can back it with other stuff. You can back it with anything you want. So and it's also falling under the banking regulations now, which make it tough if you're not a bank to issue stablecoins. So it's kind of a little bit sad. So the innovation around stablecoins is going to happen outside the U.S. still. But at the same time, stablecoins are going to become mainstream in the U.S. And whether you realize or not, your bank is going to be using stablecoins. Whether they show it to you or not, they're going to be using stablecoins in their transactions, which a lot of them already do. Big fan of stablecoins. I can't wait to see the innovation there.
Let's play a game.
Yeah.
If my friend Mitch came into $25,000 of a commission check,
Yep.
He's like, I don't need to use this. I'm just going to store this in savings. What would you recommend Mitch does with that $25,000?
If that money is really important to him, he wants to diversify a little bit. Obviously, you have to diversify. So, I mean, you got how many asset classes do you want to diversify in? But if we're just talking about digital assets and crypto here,
well, I'm curious, how much would you put in normal cash and how much would you put in digital assets?
Oh, yeah. So I would think, some of this, I would say 50% in digital assets, in a mix of digital assets. Put some in DeFi, put some in just stablecoin yield, and be long some crypto. I think that would be a worthwhile investment. And plus, the other advantage of crypto is it is if I own Bitcoin, it is a hedge against something very, very bad happening to the U.S. financial system, which in our lifetimes that will happen. Something very, very bad will happen.
Like what? What do you mean by bad?
The system could break down. The banking system could fail. It could be a disaster, major disaster. It could be, I don't want to be negative. It could be a terrorist attack, something like that. It's the U.S. dollar could get hit very, very hard. And the banking system could collapse, and that, we've seen it happen before, and things like that could happen. So now I have a way to pay for stuff outside of the U.S. dollar. I have a way to have wealth outside the U.S. dollar if I can't access U.S. dollars. We've all been in a situation where you can't get, back in the day where you couldn't get money out of an ATM for some reason. We've all been there.
Doesn't that piss you off?
Yeah.
You're like, this is my money. Why can I not get my money?
Exactly. So I say for that $25,000, there's also an added benefit that if you have some of that in crypto world, if something happens to the traditional financial system, you have some protection. You can still do stuff.
So you said 50% in standard cash or whatever. The other 50%.
I say 50% in standard investments.
Standard investments,
stocks, cash, banks, whatever.
Yeah. Another 50 in digital assets.
Yeah. And
amongst that, you'd break it down into another 3 categories.
Yeah.
Of DeFi, stablecoin.
Yeah, but stablecoin with yield. So yeah, I would. If you own a stablecoin, you should gain yield from that. And there's some U.S. exchanges that kind of get around the some of the requirements around yield paying and things like that. But again, like Coinbase is one, they get around it.
Okay.
and you can throw money in there and earn percentage, and they're safe. So that would be my recommendation. And then also just be long. Just be, pick a crypto that you think is doing a great job, that has utility, and buy some and sit on it.
How long? Like, what trends have you noticed with it?
Um,
Let's say Bitcoin specifically.
yeah, I think the only trend that I feel relatively confident about, and it's still throwing a dart. Nobody knows it's going to be up or down, but long term, I can't imagine Bitcoin not being higher 5 years from now than now.
It's gonna keep going up.
And I
Like,
said
last
that
time
5 years ago.
Last time you look, it's like 60 grand. Now today
Yeah.
it's like 113 grand or 15 grand.
I said that 5 years ago, and people always say when there's problems with the in the crypto world, and I said it's going to go down, but it's also going to go up, and I can't imagine it being worth less, 5 years from now than it is now. But you never know.
How
but,
long should I be willing to hold it? Like, if you're like, if I, you need the money in this amount of time, don't do it. But if you don't need the money,
oh, you got. I mean, that's years.
years.
Yeah, that's years. I think you got to measure that in years, because Bitcoin will be below 100,000 again for sure. It's going to drop at some point, and that'll happen.
You said it will be below 100.
Yeah, it'll be below 100. Yeah, I think it'll be below 100. Yeah. But I think it's also very likely in a couple of years it's going to be at 200. Who knows? I mean, if we could predict that, we'd all be billionaires. But so you can't predict that. It's a dart.
I
But
think you have.
but the trend. But you can kind of say like you agree with me, and people, it's in crypto in general, like any of the big crypto. If you take any of the top 20 crypto by market cap out there, I can't imagine 5 years from now any of these being worth less than they are right now. You have threats out there. You have quantum computing, which could potentially, you could potentially hack the Bitcoin, blockchain. But there's already things in place. I mean, they could update Bitcoin right now to be quantum proof, and it's just not needed right now, but it'll happen. So there are threats out there. It's so malleable when you have it in Bitcoin. Even like with Bitcoin today, I would say you can do just as much with Bitcoin as you can with US dollars right now. Not even talking about
A lot of
stablecoins.
people are probably shocked to hear that.
Yeah, no,
I am.
yeah. Because you can move it around. You can exchange it with almost any other crypto asset out there. You can buy stuff with it.
Where?
Yeah, there's payment engines. I mean, yeah, you can go into play. I mean, right now through some of the payment services, you can go into Starbucks and buy coffee with Bitcoin if you want. It's slightly indirect, but you can do that. And every once in a while I hit a e-commerce site where I can pay in crypto. So it's possible. And I think that'll become more and more commonplace. The issue right now is, again, it's U.S. regulation, it's the IRS that prevent that, because if I go into Starbucks and buy a cup of coffee with Bitcoin, that's a capital gains transaction. So now I got to go back and figure out how much they owe the IRS, because I have capital gains on that crypto that I just essentially did a transaction with. And we need some regulation around that to make it more of a currency, where like a lot of the crypto should just be currency. It shouldn't be this capital gain stuff. It should be like US dollar. It should be like US dollar. It shouldn't be an asset that has capital gains, and I think that's part of the problem. So we have to get around some things like that, but I eventually will. There's too much special interest that won't let us get around that easily. But
Like who?
no, the US government wants to protect the US dollar. It wants every transaction done in US dollar, which, good or bad. But now imagine you have transactions that are totally outside of the US dollar. That does threaten a lot of people.
How is this going to impact war and whatnot, I wonder? I just learned recently, when we went to war in Afghanistan, the first thing they do is they go in and they cut off all the local currency, and they just flood the market with US dollars, because then apparently it inflates the local dollar, right? The terrorists no longer have value with all their cash. And they go to all the businesses and they say, you are no longer allowed to take local currency. The only thing you can take is US cash.
Yeah, that's I didn't know that happened, but that's actually quite genius to do that. And I know during like World War II there is some stuff going on with currency to try to devalue everybody's currency and things. But
so I wonder how
yeah.
Bitcoin or crypto in general will play into that.
So we did in the Russian-Ukrainian war, we did see that come to play early on, where it was hard to get money in and out of Ukraine, and a lot of it moved over to the crypto world, and a lot of donations were made to Ukraine via crypto. But again, the government eventually put restrictions on it about how much crypto you could even move in and out, known and things like that. So a lot of that was shut down. But now, imagine you're in a place that you just don't have that free flow of local currency, or your local currency is being inflated at such a high value that
Venezuela.
Yes. And now if you have crypto, you have another form of payment. You don't need that local currency anymore.
What do you think about the noise Obviously, there's a lot of naysayers. There's a lot of noise. You mentioned earlier that you can just come up with a coin, Trump coin.
Yep. Yeah. I hate meme coins. I can't stand them. I think it devalues the whole crypto world. It makes it look bad. And there's so many out there right now, and it's they're all pump and dumps. They're terrible. You should never issue a token or a coin unless it has utility, unless it does something good for the world. That's the ultimate. It has to have utility. And the Trump coin, it's a meme coin. Melania coin's a meme coin. The list goes on. They're meme coins. Is somebody trying to pocket and make money. It's very ironic because the Trump coin, they copied exactly some stuff that other people did 6 months before, and those people went bankrupt. Some went to jail, and now the Trump coin, it's like, oh, this is good, So it's just how the world has changed. That just goes back to see how quick we've changed to the crypto world. We changed that quick. Where in the course of 6 months, there were people going to jail, and then 6 months later, somebody does the exact same thing, and they're fine, and they're lauded. But I'm very anti meme coins, and unfortunately, it's out there, and I like that term used. That's noise. That's noise, and I always invest. I mean, I know people that make money off meme coins, but I say, just don't put your money into them, just because you're supporting it. If you are, it's a vote, and that's really the crypto world. If you put money into any of the blockchains, any of the tokens out there, any of the coins, it's a vote for that coin. And if I buy Bitcoin over Ethereum, I'm voting for Bitcoin.
I've heard of people being worried about getting kidnapped for their coins.
Yeah.
Is it the same way like a billionaire wouldn't want to go to Haiti because they'd be held for ransom? Or is it different?
I think it's the same mentality. I mean, the falsity is that you can kind of just like, kidnap somebody and get their crypto. It's much harder than that. If you're an institution of any means, you have many layers to get access to that crypto. So it's not just one person. Great. If you're an individual person out there that maybe owns some crypto, I think there's a risk.
But why is it different than having cash?
Oh, no different. They could say,
no different.
We know you have a lot of money in your bank account. And then the myth is that if it's crypto, it's less tracked. It's, you won't try to come and get it back. But if they had US dollar, there'd be nowhere. That money be gone. If you gave somebody a briefcase full of US dollars, you'd never see it again. If you give them crypto, at least you could track where it went on the blockchain. And again, governments are getting very good at tracking where any stolen crypto goes. Very good.
Do you have people that you're looking up to in the crypto space?
A lot of the people that we look up to are anonymous. They don't Satoshi. Satoshi, for example, the person or people that invented Bitcoin. We don't know who they are or what, or if they're even real people. So you got to respect people like that came with the genius idea.
What do you mean, even if they're real people? Hold on.
What? Well, nobody knows who Satoshi is. There's been a lot of suspected people, but nobody really knows.
Maybe
and
it's Peter.
It could be a government entity. No, I wish it was, but it's not. And it could be
exactly what Satoshi would say.
Yeah, it could be a government. It could be a group of people. And there are some people involved very early on that my suspicion is it's a group of people. You got to respect somebody like that came with the original idea of the blockchain. Genius. So smart just to come up with that. How you can have a decentralized payment system and figure that out. That is just that's amazing. That's what it's going to be looked back upon as one of the greatest inventions in human history. I don't think we see it yet, but we will look back upon that and say, wow, that was genius. That was just something that nobody fathomed could be possible, and somebody made it possible. I'll keep them because we're in the U.S. now, and we're in New York. Coinbase, they were kind of some of the first movers in the U.S.
Is that where somebody should go buy their crypto if they're new?
If you want to pay high fees and be safe, yeah, of course, yeah. I mean, if you're gonna buy Bitcoin and sit on it for the next 2 years, yeah, go to. What
about the traditional brokerage places? TD Ameritrade, Schwab.
Yeah, you can
Fidelity.
buy crypto through some of those now.
Those are fine.
Yeah, you just pay more fees, and it's questionable if you have who actually controls your crypto at that point. You in general, you want to get your crypto off a central exchange. You want to have it on your own wallets.
Can you do that with Coinbase?
They're starting to now. So Coinbase does have some custody options now, but in general, you have to have if you buy Bitcoin and let it stay on Coinbase, they essentially control it, own it. It's there's a number next to your name, but they control it. So Coinbase is a good place to go. But in the U.S., it's Coinbase, Gemini, Kraken. Those are the big big exchanges. But you can go. It's legal in the U.S. to use decentralized exchanges. Some states have restrictions, but you get into Pancake Swap, you get into Uniswap. If you have your own wallet, you can go out to those and you can, it's a decentralized exchange. I mean, there's no central authority. It's all smart contracts resolving each other, and you can. It's again, it's the future of marketplaces are these decentralized exchanges. And I would always recommend that if you want to have a little more fun, go out to Uniswap and do the exchange there. And the other side of like a Uniswap, the decentralized exchange, is another place to make a lot of money. So if you're exchanging Bitcoin for USDC on Uniswap, that can get unbalanced. You may have the decentralized exchange may have more Bitcoin sitting there than USDC, and some orders come in for, I want to exchange my Bitcoin for more USDC, and we're short USDC. And so how do we do that transaction? Well, the great thing about decentralized exchanges, there's the other side of it that I can come in and I can say, I want to balance that pool. I see there's way too much Bitcoin here, not enough USDC. I'm going to come in and balance that pool. So I'm going to provide USDC into that pool and to balance it out. And I get paid for that. So I can get paid for balancing that pool to create that market. And you can make, if you ignore the esoteric tokens, that's another place where you can make hundreds of percent interest if you want by balancing these pools. So again, a beautiful system. Decentralized exchanges it works. It's there. If you got to Uniswap, buy Bitcoin, whatever, but you have to realize there's another side of that transaction a lot of times, and that's people like me that are making money off of your exchange.
You're a big thinker, and when you talk about things like the banking system go down, you're not a negative guy. You're not an alarmist. I mean, you are a very numbers-driven person.
Yeah. I always think of risk in numbers, and I'm always running the numbers in my head. Always. I mean,
Were you an accountant? You work at Deloitte. Were you?
No, I wasn't an accountant, but I'm always a math guy. I've been a math guy, as physics and finance and all that. Risk and probability is always in the back of my head. It's just like my mind automatically calculates risk and probability as I'm even walking the streets of New York. Late at night or something. My mind's creating the. It's making me either less afraid or more afraid. When the math goes through my head, you have to keep doing that. And what's the risk? What's the risk? And that's why I say in the crypto world, you can make more money if you're willing to take more risk, just like you can in a lot of assets. But in the crypto world, it's so easy to hedge against any risk, where it's much harder for the average person to hedge against a risk being long, Apple. I'm long Apple stock. Well, how does the average person hedge against that? They probably don't know how. Well, you buy put options. That's what you do. But a lot of people can't even do that. They don't have authority to do that. They don't have, the broker won't let them do it. But in the crypto world, there's systems up there that automatically hedge for you if you want to. So you can be long Bitcoin, but it'll hedge the short side of Bitcoin if you want. So that you can hedge, and you can hedge other stuff. So that's a way of tolerating risk. But the risk has gone down so much. Going back 8-9 years. You had to be afraid all the time that exchange is going to go under. They're going to have issues. There's going to be a rug pull on that coin. All that has disappeared in the last few years, where there's still risk out there, and there's still rug pulls. And rug pulls when somebody issues a token and they say they're going to do all this stuff, and everybody buys into it, and then they just disappear with all the token that they have, and they sell it off in the market. And that still happens, but the security you have, the ability to store your tokens and move your tokens is so much better. Volumes are way up, so you don't have the problem of, I can't get out of that token because there's not a volume. That doesn't happen much anymore. So the risk has gone down greatly, and the rewards are still there. The other thing that is happening more and more, you're starting to see it, any asset you can tokenize with crypto. So this building we're in right now, we could tokenize it, and you could come in, you could buy that token and own part of the building.
I could just own one bedroom in Peter's house.
Yeah, you could do that, or you could own 1% of the building. And the great thing is, now let's say you want to sell that 1%. If you were in a partnership that owned the building, it was okay, how do I sell this? What do I do? It's like a hassle, gotta get attorneys involved, got all these legal agreements. Now you own that token, you can just go sell that token to somebody and they'll buy it, and now they own the 1%. That democratizes assets. You don't need that bank involved. You don't need to be a credit investor. You don't need all the attorneys involved. Now you can own assets. So now you have the ability with some of these tokens out there, you can own an asset that you thought you never could own.
Can you do that with a company?
Yes. So that's an excellent question. So that will happen. So there's already digital companies that don't exist in the real world, but they're companies that exist in the crypto world, and they have their own governance token. And by owning the governance token, you get to vote on any measures. So you're a shareholder at that point. The legal framework for that is very tough though, because like, great. So you have this, what state, how do you get in state laws that way? And that has to be worked out. It will be worked out eventually, but that will be a trend that we'll see happen. But even outside of that, let's say you and I start a company tomorrow. We can have all the shareholder agreements, have that. But wouldn't it be a better way to just say, hey, we're going to issue a token that represents the shares in the company and just do it that way? And then you don't got to have all this shareholder stuff, all these agreements and things like that. Just have a token. You get 50. I get 50 token. You get 50 token. We'll share 100. Done. And then if that company becomes worth something in the future, you can just sell that token if you want and cash out that way. You can trade that token. You can do whatever you want with that token. You don't have the whole hassle of, now we got shares and how do we get rid of it and how do we do this? And we had IPO someday, and all that goes by the wayside. The innovation is incredible. I mean, there's so much innovation. I think, again, there's 1,000 new tokens that come out every day. A few of those have great innovations in them every time. And it's more of a battle of, there's no legal framework. There's, how do we get volume? How do we get noticed? Is it solving a problem? And that's really what the world is. So when people say, Bitcoin doesn't have any value, Ethereum doesn't have any value, I disagree with that so much. We just talked about how many things here that make it have value.
I am so impressed with you. You are happy. You've made it. You've got a beautiful family. You look good.
Well, you know the theory of happiness.
You've never been depressed.
Yeah. The theory is that my goal in life is to make myself happy, people around me happy, and then the world happy. And that's all that matters. That's all that matters at the end of the day. You can decrease your happiness by taking too much risk, I think, or you can increase your happiness sometimes by taking a little bit of risk, measured risk. And that's how I judge happiness a little bit. So I've had days where I've lost tons of money where I'm like, I'm almost a little bit depressed here. You know what I mean?
Can you share how much?
Yeah. I mean, there's been days where I lost $50 million in a single day. So there's been stuff that happens.
How'd that feel?
I remember I was in my car when I finally realized I was driving to a dinner. And I remember I was in my car when I finally realized and added up how much I lost that day. And yeah, I was a little preoccupied. I think but it to me, it was a challenge.
What happened?
We got caught just being, selling options and things like that. And we knew the risk was there and we knew eventually we were going to get caught, but the market just moved in a bad direction and lost some money. And it's, I know it was just a downturn for a short time and but yeah, I kind of remember like, oh, this kind of sucks. I see negativity or downturns or fear as opportunity. And I always, like, whenever I see chaos in marketplaces, it's an opportunity. It's not chaos.
It is.
And I may have lost money that day, but I saw that opportunity in that chaos. Should you feel guilty if you make money off a bad event? And that's something I always have in the back of my head. You can hedge for a bad event happening, and then when it actually happens, you make money off it. It's like, should I feel guilty? You probably shouldn't, but I do. I feel guilty then a little bit. Yeah, and yeah, but you have to, bad things happen. There's bad people and bad things happen. And bad things will always happen. And I don't think we realize how good we have it right now. There's so little bad happening. And
so many people would disagree with you on that. Look at you.
Yeah,
look at the news. You look at the social media.
Yeah.
You talk to people. Everyone feels so heavy right now. So tell me more about why you feel that way.
I feel that way because right now we're in a situation where your chance of dying on natural causes are the lowest it's ever been in human history. The economies of the world are doing pretty well. We have a lot of luxuries. We're at the advent of AI, robotics, crypto. We're at the advent of all that. There's a lot of opportunity. There's a lot of mobility. But I don't see what there is to be negative about. You can say there's some wars going on in the world, but there's less war going on now, less civilians dying than in pretty much any time I can remember. So we may hear that and people may say it, but again, the math doesn't play out that way. The math says this is the best time to be alive ever.
This is a bit cliche. I'm just like burning to know, what do you hope to be known for?
Doing stuff that nobody's done before. That's what drives me. I think every time you do something that nobody's thought of or created before, it's a great feeling. And when you're doing something like that, that makes the world a better place, or takes out inefficiencies. uh, I love that, and I just love that. And I also, as part of the family office, we're an incubator, so we create new products, we create new systems, we do a lot of things in that, and everything we do is pretty much something that nobody's done before. And it's like I'm the first person in human history to do this.
Prediction markets. Tell me about those.
So prediction markets are events, essentially creating a marketplace on events. Who's going to win the next election? And you can buy an outcome of that event. And however it turns out, you're either 1 or 0, depending how it turns out. And these markets, the volume's increasing greatly. The biggest thing is Kalshi, there's Poly Market. A lot of them run on blockchains. And so much volume's thrown there. Institutions aren't using to hedge now. It is a wave that's coming very quick. Robinhood has, you can do prediction market on Robinhood. Interactive brokers, you can do prediction markets. Kalshi was the one in the US that got through all the regulation with the CFTC, and they kind of opened it up. So now if you want to go through the year-long process, you can have a prediction market in the US. And there's a lot of ones outside the US that, like Polymarket, and then it's the frustration I have, like Polymarket as a US citizen, technically you can't use it, but a lot of Americans do. But these are actually markets that help you determine what is going to happen in the future. They're essentially predicting the future. The prediction markets have proven to be better predictors of any polling, any surveys. They're better. They predict it. So predict the future, but also you can hedge stuff. So now imagine, we got to talk about risk and protecting on the downside. What if I want to hedge against, I'm long a bunch of stocks and I want to hedge against the Fed raising the interest rate? So I can say, I want to go into this market and say, I think the Fed's going to raise the interest rate, and and I want to put a lot of money behind it. The Fed raises interest rates. That market closed at 1. For every contract that maybe I bought for 50 cents is now worth $1. So there's a way to hedge against it. So institutions are getting involved. And the one thing that I'll talk about here, and this is, I think, the first time is new. This is probably new to everybody and something we're getting involved with. And it's the first time I'm talking about it. Within the prediction market realm, there's something called truth markets. And that's kind of a term I made up, truth markets. But events that occurred, it's creating a marketplace for them, whether it really happened. So now you pull up the CNN.com page this morning, and there's a headline. How do you know if that headline's true? How do you know how accurate it is? How do you know if the number in that article is true? Well, now you create a market off that, and people are actually gathering the data, trying to figure it out, and providing the data to the marketplace and making, for lack of a term, bets on it. Yes or no, is this true or false? And AI judges the data provided. When AI is confident that it's 90% true or false, the market resolves. So now you have a way to actually see if something you just read is true or false. And the markets are going to tell you that. A decentralized market is going to tell you whether that's true or false, that people have a vested interest in because they have money on the line. So they don't want to push a narrative, a false narrative if they have money on the line. They have to trust where they put their money, and they want to do that. So if you're closer to that event and it's true, you just made a lot of money. Because you have more information, more intelligence to know it's true, or the opposite, you know it's false. So there's, ironically, I walked in here with 2 matchas, and I've been hearing about this huge matcha shortage, and matcha prices are going to skyrocket. You're not going to be able to get matcha. I've been reading that. That's like a perfect example. Like, there should be a truth market on that. Is there really a huge matcha shortage right now or not? I don't know.
We need to know.
So we need that truth market to say whether it's what's true. Did Epstein, since we're in New York, did Epstein kill himself? Was it suicide or not? Things like that. Those are all truth markets that people can actually take a side on. And that will change what is true or false. That image, was it AI generated or not? These are all markets.
When are we going to be able to access this?
It's coming. I think we have probably a few more weeks left on the programming. Then we're in beta. Then we'll release it outside the U.S. at that point. So
Wow.
it's cool. It's awesome. It's really neat. And
Congratulations.
you couldn't do this before AI, by the way. With AI, the only way you can do this with AI. So now AI's here, so you actually have a way to do this. That's going to disrupt so much. It's going to be really a truth-telling market, which I'd love to do because they're doing good for the world. It doesn't allow people to put out false stuff. So yeah,
Having fun and doing good for the world.
Yeah.
Peter, thank you for making sure that we don't get left in the past. Thank you for sitting down and sharing so much knowledge, experiences. I think the world of you, brother.
Yeah, same here, Andrew. Thanks. This is awesome what you do, and I love what you do. The people you know, the people you talk to, you really have them, to talk about stuff they normally wouldn't. And I just love what you bring out in people and how you do it, and know so many great people.
Well, thank you. We're going to go meet some more of them at the Comedy Cellar tonight.
Awesome.
Let's
Look
do it.
forward to it.
All right.
Awesome.
Thank you, Peter.
Thank you.
That's it. Thank you so much for tuning in to Permission to Shine, the podcast dedicated to sharing the most humble, inspiring stories that I know you will love. Again, this is Andrew Namanny. I appreciate you tuning in. As always, please reach out. Please follow on Instagram, on YouTube, on LinkedIn, Spotify, Apple. Leave us your thoughts. Let us know who you want as a future guest or what's your takeaways from this conversation. We'll talk to you soon. Have a great, great week.